Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant, host of the Smart Property Investment Show, recording in our 10th year of podcasting. Probably heard me say it beforehand. There's a lot of property podcasts around right now, but not as many. At 10 years old, I can count two. And one of them, the other ones, other than the Smart Property Investment Show, is the Property Couch. And I had been in the studio recently. You've probably seen it. Chat with Ben Kingsley and Bryce Holdaway, reflecting on 10 years of podcasting, all that sort of good stuff. So make sure you go and tune into it. But that's not what we're here to talk about today. I have a fledgling superstar in the studio, and I've just learned a few things about him, which I didn't know. You would know him. He's been here beforehand, Lachlan Vidler. How you going, Lachlan? You well?
Mate, I am very well, very busy, but very well.
And what's going on at Atlas at the moment? Anything exciting, of which you are the founder and director and CEO and probably something in chief? Yeah.
Hey, what's going on at Atlas Property Group? It's just busy. Like I nothing more, nothing less. We got heaps of exciting stuff going on over there. We had a great end of financial year. We got a lot of deals over the line for clients who were very, very happy to have that done.
Good deals?
I'd say great deals.
Tell me about some of them. Just highlight. Where, what, when?
We were buying a little bit all over. We've done a little bit of Vic buying, some Queensland buying, some SA buying, a little bit of New South Wales buying, so a little bit all over. But to me, I think that the thing that really stands out on all those deals to me was smooth on our end. And I mean that with the context of no deal in property is ever easy, even when it looks easy. But on our end, really having the good things in place that when things were happening, the clients, they gave us amazing feedback around we knew you had it in hand, stuff was happening, blah, blah, blah. But we knew that you guys were dealing with it. And then, there were some deals we had to kill, but they were like, no, you know what? Good comms, everything went smooth. It just wasn't the deal. That's all good. So that's probably
away.
Yeah.
So on that basis, and it's probably important that your clients are conditioned. They know the drill. They can move quickly, decisively. Everything's set up beforehand, and then actually making a call on a property should relatively be straightforward.
Yeah, and we do a lot of work prepping them with that, our process that we go through with them. By the time we get to the property side, so much of that heavy lifting's been done. They feel so confident about what's going on, and for us, we're smart when we buy it. We put good conditions in contracts. It gives clients protections. It means that, we might be able to make a move in a couple of hours because the client knows, if something's going to go wrong, I'm protected. But if it goes the way that we want it to, then we were first in, so life's good, So I think that's just what comes with experience.
Buyer's agency, it's the art of the contingency, I'd call it. Everything is...
I'd back that.
Seriously, everything's always building in contingency into your decision making, and even at that contracting side, it's all contingent. Like you sign a contract, people go, "Whoa, you signed a contract for a piece of real estate. You're committed now." Well, you're not, because there's built-in gates through that whole process of structural cooling off periods, but then there's other conditions you put in there saying that, I could pull out of this deal at any point in time during a cycle of that doesn't stack up, you can get out. So it's the art of the contingency.
I had that conversation with a client last night, actually. I don't do a ton of deal presenting anymore. I've got a great team around me for that, but like any, trying to be a good boss, I jump in when the team needs a bit of help when they're busy. Yeah. And I was having a chat with a client last night about a property we presented and just getting his final okay for us to go and finish off the negotiating. And as most people are, he was just a bit nervous around the pricing. And he's just saying oh, are you sure? That's that's where you guys feel the value sits, and that's what, we're going to try to buy it at. And I, talked him through our analysis. He said, look, I get it. Obviously, my biggest concern is I just don't want to overpay. Yeah. And you guys, I can't dispute what you've put in front of me, but naturally I'm just nervous because it's my first deal and I don't want to overpay. And what I said to him was, mate, I get it. Fair enough. We're human. We could make a mistake, or the valuer might see it different. There's a million things that can go on, but you know what? None of it matters, because at the end of the day, in this deal, you got a finance clause. And if the bank isn't going to loan you the money because the valuation doesn't come in where you want, whether it's we made a mistake or any one of a million other things, mate, you're protected. So let's get the deal locked down. so we don't lose it.
Control the deal,
And you
control the
control
property.
exactly right. And he said, I get it. Let's do it.
Yeah, and that's a skill, and controlling the property then it gives you contingency, right?
Yep.
So anyway, I'm big on contingency. I like. Hey, what I want to talk to you today, and it's something I've been thinking about a little while, is a lot of people, and the ABS stats come out recently from I think 2023, which was, the percentage of Australians that own one property, two properties, four properties, and you still get this cluster of people get stuck, sort of like a property 2, 3, or 4. So I want to talk to you today around, and I like a number of the 4 reasons early stage investors get stuck. But to my earlier point around 2 things I learned about you. Number one, you're going to be on the television coming forward. I want you to tell me a little bit about that. But number 2, you've just secured, you've just been promoted, you've just taken on, I don't know the right language for it, the chair of the Property Investment Professionals of Australia.
Yeah.
Yeah, love it, don't you? You can't help yourself.
If there's one thing that people who know me know that I love to bite off, I don't think more than I can chew, but definitely, a full mouthful of it. Mate, a few exciting things going on. Hey,
that's pretty good. So the Property Investment Professionals of Australia, of which I was on the board of that for probably 5 or 6 years, many years ago.
Yep.
Then under Ben Kingsley, who was the chairman at that point in time, who went and became the chairman of PICA, which is Property Investment Council Australia, which you guys have an alignment with. Then Nicola McDougall was, Peter Clezos was the chair. Then Nicola was the chair. Now you're the chair.
Now
you're the custodian, the steward moving forward. What's going to be your grand plans for Pippa?
What's going to be my grand plans? Well, look, I think that for anybody who doesn't know Pippa or what Pippa does, I really encourage you to go out, have a look at our website, because we're there to be the peak industry body for people who work in the property investment profession. And that's not just buyers agents. That goes to accountants, brokers, financial advisors, anybody who is in the property investment industry, right? And, in terms of my grand plans, I think that the body, we've been left in great standing from Nicola. She drove a lot of great initiatives and put us into one of the best positions we've been in ever, or not even one of the best position we've been in ever. And I want to keep driving that forward. I think that there are so many property investment businesses out there that aren't part of us yet. We've got a really strong organizational body. We've got hundreds and hundreds of members, which is fantastic, but we want to keep doing that because we can support businesses to be better for consumers, support businesses better so that business owners can achieve their own successes as well. So we want to keep doing that. And we also want to continue strengthening the industry for consumers, so that we can set them up and make sure that people they're working with are the best in the industry,
It's pretty cool.
Yeah.
So how do you fit this in with your academic work?
Well, I've had to step back.
Okay.
I've had to step back from my academic stuff at the University of New South Wales, which is sad. I love teaching. I love helping
Are you like
people.
an adjunct professor yet or anything like that? Or?
I'm not. Maybe maybe after my hiatus, maybe I can come back to something like that. But I love that teaching side. I really do. I couldn't tell you why. I think I just love being able to share my knowledge in whatever respect. But some things, have to take pauses, can't do it all. And some of this other stuff I got going on.
So how are you finding time for this television show that you've just been cast onto?
Yeah, so I've joined.
Is this more glamorous than, what's that real estate show in Sydney again?
Is it Lux Listings? Yeah.
Is it a more glamorous version of Lux Listings?
It's definitely
deluxe listings. Yeah.
Definitely a different spin to what old Lux Listings was. But no, very exciting. I've come on and joined with the team over at Channel 9 on the TV show Budget Battlers. So the first season happened last year, which was fantastic, and we're on to the second season this year. And I've joined them as their investment expert. And the premise is, I think it's an amazing premise of the show, unscripted, which is fantastic. There's certainly no, not like I think a bit of the Lux Listings going on, but no, the premise of the show is really straightforward. It's people who might be a bit down on their luck, or people who have been, big community members, but often always looking out for other people and not themselves. And they own their own home, but the home is not in great condition. And we go in there, and it's a great lead, Jess and Norm. They were on the block a few years ago. And we basically go in, fixed budget of $10,000, 5 days, and I can tell you it really runs 5 days. There's no overflows or anything like that, and we reno the house. And we get volunteers in from the community, often people who know the person that we're helping,
or the local tradies and all that sort of stuff.
Everyone who wants to help, and like I said, it's often it's a bloke or a lady in the community who's done a lot, has all these people that are big supporters, and now finally they want that person to be taken care of. So my role is to come in and not only help with the renovation side, but also help with that investment spin. Because for these people, like most Australians, that home is their biggest single pile of wealth. So thinking about how we can improve the property, but also doing it that's going to add the greatest value.
Yeah, that's pretty cool.
Yeah.
Well, it can be done. I remember on the smart property investment, we did a full reno of a 2-bedroom apartment.
Yeah.
In 3 days. So Friday, Saturday, Sunday, completely new kitchen.
Yeah.
New bathroom. Painting, electrical, everything.
Yeah,
it can be done.
Absolutely.
You've got to line it all up though.
Absolutely.
Pitch in, but so they're going to give you some hand tools to mess around with, or are you going to be just standing there in a suit?
I'm not. I'm definitely not getting around in a suits. We're in there. We're all jumping in. Yeah, everything's going on. But no, I won't ruin it. But it's going to come out season 2 later this year. Prime time, Channel 9. So everyone can look forward to that as we run towards the Christmas period.
Well done. That's I just love a home reno show. So it'll be good to see on the big screen, mate, rather than the small screen wherever you're tuning into this on the YouTube or elsewhere on social media. But all right, let's get into it. So the 4 reasons most early stage investors get stuck, and there's a lot of reasons for this, and we'll pull this apart. We'll just go to a quick break first. Stay with us. Back in a moment. Welcome back. Phil Tarrant, host of the Smart Property Investment Show with Lachlan Vidler over at Atlas. Now, 4 reasons why most early stage investors get stuck. What's the main reason? First reason.
I don't think I could say there's a main reason. I think they all kind of link together, but I think starting with number 1, which probably does, put itself above for good reason, is too many people jump in and they treat investing like it is a one-time event and not like it's something that's got a strategy, let alone a scalable strategy behind it.
So it's one-off. They think they just do it once and that's it.
I think that for a lot of people, they feel like buying that investment property, especially that first one, it is such an achievement in their mind that they can't even, naturally their mind doesn't go to what is going to happen in 5 or 10 years' time. They are so laser focused on that 2-foot world around them of, once I've bought this first investment property, like, not I've made it, but like in my mind, I feel like I've made it to a certain level, Yeah. And I get it, I really get it. But when you don't have a portfolio plan, you don't have a roadmap, and you're just buying and you're just sort of reactive to it, it's hard to scale down the road because you're going to have so many mistakes that you're probably going to be fixing up, from the start.
Which happens for a lot. And I guess this is mainly a mindset thing. It's difficult for first-time buyers to think of what's the next steps and what's bigger. And you want to start with the end in mind, but you don't know what you don't know if you don't know what the end looks like. So to be sitting there thinking this has got to be one of many as part of a strategy or a plan to do that, you really need some help with that. No doubt that's where you guys really sort of come to the fold, right? Coaching them through that process.
100%. And like we love it so much, and we think it's such an important part that part of our tech platform that we've built out, which people have heard me talk about, for a long time. Like we've got our suburb research platform that has almost 500 million variables in it that we look at for analysis. But we've also built out our own portfolio platform as well, where we can go in and we can put people's property portfolios into it to build that property plan for them, so that when they start with the first one, we're taking on the burden of thinking about the 5th one, right? Or the 3rd one, depending on where you want to get to. But if you don't do that, and for most people, nobody has our platform because we built it. First line of code up, right? We built it. But even if they don't have something else at their fingertips, which 99% don't, property 1 will typically end up becoming the barrier to property number 2. Yeah. Or if it doesn't, because most people think, well, actually the equity from number 1 is going to help me get into 2. That might be true, but I can guarantee for most people, property 1 will become the barrier for property 3 if you haven't thought about it properly, right?
So you can build with that purpose in mind. Well, again, it's difficult to understand and appreciate, and you probably a lot of people be nervous about that first purchase, and there's a lot of new things going on. But more than ever before, if you get that first one wrong, particularly with prices going up and a disparity between now prices and yield, which is getting wider and wider by the day, like that can really throw a big spanner in your wealth creation journey.
Oh yeah, 100%. And like I'll talk about a few stats and things like that later on. But I think that now, like, if you make wrong steps, you're going to put yourself in a bit of a precarious position, right? Because as you said, prices are moving, and those stats will come, right? But the thing is that property isn't as simple as just has your property gone up, right? There's a reason people say property is a game of finance, as well as a bunch of other things. So with some awesome conditions coming our way right now, but also, over the next probably 6 to 15 months, I think, right? You don't want to buy a property that ends up holding you back, whether it's for your direct next property, but definitely not for your third or your fourth. And I know that a lot of people think, well, number one is hard enough to get, and that's true, but that is the psychological problem that I really want to, try to dispel in this episode, is that number one is the hardest one to get.
Yeah.
But you can't have your head in the sand not thinking about 2, 3, 4, whatever, just because you're so focused on how challenging number one is.
A lot of people get to that first one and they're fatigued because that's probably the one time that you really need to save for a deposit. Because then you get through this cycle, and you talk about finance of debt recycling, right? And that's why the first one is so critical, because you do all this work to save a deposit, so you get in the market, and you may get some help with that. There might be some family pledge stuff or whatever, but you get into the market. If you get that one wrong, and getting wrong being, or largely, that it doesn't grow in value quickly, you're stuck. You're just completely stuck. So that's what you need, fast growth.
Absolutely. There's a reason why when we go and look at the markets that we invest in for clients, and then also the properties within those markets, there's a reason why we're looking at how can we try to inject as much quicker growth as we can, right? At the end of the day, property is a long-term asset. And it's a conversation we have clients, it's a conversation that we have with clients a lot, because they see our fantastic results. And that suddenly now becomes the norm of being like, well, if I don't get, 15% in the first year, I consider this a fail. And we often have to have that conversation saying, well, no, that's not true. That's what we get in, most cases, but property is a long-term asset, right? The most important thing to remember is that if you can front load that growth, that is what allows you to segue into your next property faster if you've set the other things up correctly as well, right? If you don't, you end up, and I think I've even said it to you, with you on this podcast before, you end up in this scenario of like the old super ads of compare the pair, right? And it's in 10 years' time, one person has only got one property because it didn't really grow and they couldn't save and life happened, and person 2 has got 3 or 4 because it was done in the right manner, right? But that's the issue that we've got to think about, is doing it right from the start, not when you get over that first hump and you think, oh, well, now I'll think about it because I finally got there,
And this is a key thing, you need someone to be supporting you with that, and you can do it yourself. But, the best investors I see have a really good team around them. Accountants and brokers and buyer's agent, all that sort of stuff. And this sort of second point here, why most early stage investors get stuck in, and I'm going to say, of course you're going to say this, is that they try to DIY their way to freedom, and it costs them more than they think. So they try and do it all themselves.
Yeah.
And again, you only know what you know, and unless you've got the time, energy, and effort to dedicate a long time into this, you're better off getting shortcuts by paying good people to help you out with it.
Yeah.
Simple.
Can you name me one person in the world who has been successful, like hyper successful, that's done it themselves?
God,
in anything.
Choose anything, no.
And that's the point,
no,
right?
Every sporting great has a great coach or mentor. Every business great has some, connection somewhere with, Richard Branson, for example. He'll always put his hand up saying, I'm not the smartest guy in the room. I get really smart people around me.
Name $1 billion business that was done by one person. Didn't have a single team member, didn't have a single advisor, didn't have anything.
Yeah.
You can't do it, right?
Doesn't exist.
So
They do say though that that now with AI you'll start getting billion-dollar businesses with just a handful of people in.
well, you know what?
You.
When that happens, I'll be the first one to come back on the podcast and say, all right, well, now that's no longer applicable. But as it stands in the world today, nobody who has been hyper successful in anything has ever done it by themselves. And there's a reason, because people who are hyper successful, whether it's sport or business or professionally or whatever it is, all those people understand that they can't do it all, and it's not worth their time to try to do it either, right? So to me, that idea of trying to DIY yourself to freedom, all I think about is if you did DIY yourself to freedom, how much further would you be if you got a team?
Well, this is the point.
Right? What was your opportunity cost to do that, you know? So I actually talked about this on a different podcast recently, but it's
Trader.
Trader?
Trader.
Not trader.
No.
Traitor.
Yeah, you're seeing other people.
I'm seeing other people, you know, but I'm honest about it, though.
That's okay.
You know?
I can handle that. I'm a big boy.
I was telling this story the other day. It was a client who recently came back on with us. I won't tell the full story because it's not contextually relevant here, but the point of it was that this client has come back on. Between them and their partner, they've already done 3 deals and they're back for their 4th with us, right? And I was saying that their first couple of deals were done earlier with us, like in our piece. Our fees were smaller, you know, like shock horror for everyone. We charge people a fee for what we do, right?
Crazy.
I know. But our fees were smaller, so like they've got a good circumstance here. But I was working out that I reckon they've spent in total across 3 existing purchases with us, less than 40 grand, right? Across 3 purchases, right? But from that 40 grand investment, they've made, I reckon, upwards, if not more, than $400,000 of equity, right? And the story that I was telling on that podcast was they're smart people. They've surrounded themselves over their life with good advisors that put themselves in a position, obviously, invest in property. But for them, like, imagine what if I said to you, I'll give you 400 grand if you give me 40. Like, it's a no-brainer, right? But they were across that idea. You don't need to DIY yourself to freedom. And I think for them, the way the whole conversation started years ago, which is what, you know, we have this conversation with people today, but it's not like we go out of our way to have it. It's just it usually organically comes up in conversations, is that, like, property, I reckon, has in some ways never been easier to buy, but it has also never been harder to buy, especially good investment grade, investment quality, whatever you want to say, property, right? And REA, which, you know, take it with a grain of salt, because I'm sure they also want to, they're also incentivized in some respect for this survey that they did, right? But I can believe it from what I've seen. They did a survey that said it takes the average person over 9 months to buy a property from when they start. When they start actually trying to do it, 9 months, right? Imagine for the people on the investment side, you know, trying to do it themselves between dinners with the family, bathing the kids, and your normal workplace.
Yeah.
9 months in good markets could be 100 grand.
Absolutely.
You know?
And you see it all the time, and they're typically the people picked up it. And there's probably more of an owner-occupier, you know, stat than an investment stat. And you see them in the newspaper every Sunday or on the television saying, we've been looking for 9 months and we get so disappointed every single time, and here we are at another auction. Like, they spend every Saturday going around looking at homes, like, which is good early on, is you've got to go out and sort of burn some shoe leather yourself just to get a feel for it. And you quickly work out, you just go, hey, this is hard work. Like, it's hard work. You're compromising a lot if you're going to go all in as a DIY. And it's okay. I know a lot of people that do it really, really well. But the stats are there. You know, they take longer to buy, and therefore there's missed opportunity costs. They miss deals. They get frustrated. They often overpay because they don't know what stuff's worth. You know, they choose underperforming assets because they typically get to the point where they just go, we're so sick of this, let's just get something. And they normally sort of settle for something which isn't right. And for a whole bunch of different reasons. They don't get access to the deals. They use the wrong data. They don't have the networks. You know, it's a really competitive space. You know, and if you're competing for property, you're competing against professional buyers, i.e. buyers agents these days.
Absolutely. And I've actually got another story I want to tell, right? Like, it's not just about not trying to DIY it yourself. Does that even make sense? DIY it yourself. Do it yourself. It doesn't really, does it?
Yourself.
It's not about trying to DIY
Yeah.
over to your freedom. It's like when people say ATM machine.
Yeah, an ATM machine.
It's all a tongue twister, isn't it? Right? It's not just about not.
It's a DIY spy. Do it yourself property investor.
I love it.
Yeah,
I love how
you've
written it down as well. I love it.
It's a die spy.
It's not just about this part of the conversation around, the 4 reasons most get stuck being, not trying to DIY it to your own freedom. It's also about getting help from the right people. And the story of the quick story I've got before we, we'll probably start moving to the next one is, got a client who's come on board with us, right? I'll say her name. Shout out Freya if you're listening in, right? I was talking to her yesterday, right? She's at a stage of our process, talking about the markets with her, and she just wanted a quick chat. And I said, I'll jump in, I'll do the conversation, not one of my team with her, of which she was obviously really grateful. And she said to me, I put your name and Atlas Property Group in my phone, in my notes 2 years ago, right? I saw your stuff 2 years ago, right? I tried to get things going for myself all the way back then, and I couldn't quite do it for various reasons, right? And then I don't know when it was. It was obviously between now and then. She decided to go with somebody else, right? And I don't even think we actually had a conversation with her. She said every so often, she'd go through a note, see the name pop up or hear me somewhere or whatever. Anyway, she went with somebody else. Anyway, she ends up in this big legal dispute about the property and certain things that went on with the property. And anyway, her words to me literally were, I was singed by the sun, but I just escaped. And for the context of the story, that is absolutely true, right? But my point of this is, it's not just about not doing it yourself, because you're never going to get a better result. Hyper successful need a team.
So she did by herself.
No. She used a professional, and this is where I'm going with it. Right? Yeah. It's also about using the right professional, and you want to be around the people that have things like our tech platform. You want to be around people who have a team themselves. Like, I can't be successful by doing every job in Atlas myself. I need a team to support me, and our clients aren't going to be successful or as successful if they just had me. I have people in the team in very specific roles just doing that, because they are absolute weapons at that specific thing they do, right? So it's not just about the DIY on your own behalf.
Yeah.
It's also about making sure that the right professionals are there.
Absolutely.
When you're doing it.
And not all professionals are created equal. We know that. We speak about that a lot. I'm just curious about what happened with this. Like you said, she ended up a legal stouse with the buyer's agent?
No, I think it was about the property deal that was put together, but it was, I don't think, the strongest of advice and help from the BA. And she said there were a few alarm bells that went off during it, but there wasn't much experience there and all the rest.
Did you ask her why, Freya? Did you ask her why she chose that person rather than you?
Oh, you know what? At this point, she's with us. I don't mind.
Doesn't matter.
I don't care.
I was just curious why, maybe bring her on for a chat at some point.
Well, when we get the deal for her, she might want to.
It. But, look, supply's only getting tighter. There's more BAs out there, all with the best stock in town.
Yeah.
Rental demand still remains strong. And we saw, despite, the government's undertakings to reduce immigration, it just continues to sort of drive forward. So, the market it's moving faster than what it ever has done. And that's the speed of change in the market, but it's also the speed in how people are transacting property in the market. Things have got faster.
I couldn't agree more. I mean, I did an episode. I can't remember when it was. I think it was last year. Maybe it was towards the end of last year. I did an episode where I talked about how many regions were left in that affordable bucket.
Yeah.
And I talked about it from where it was back in, I think, 2020 through to 2020. Maybe 2 or something, and then to, I think it would have been the end of 24, right? But people who are still trying to approach property markets like it is 22 or 23 or something, they're getting left behind, right? Like we still have so many people that call us up today, and they'll go, "Oh, can you help me find something for like the low 300s?" I say, well, I won't say it. Obviously, the team will, but I have a conversation with the team, mate. Like it's not possible, right? And then I'm sure some smart ass will say, "Oh, I could find a market doing this or that." But I'm talking about houses in good investment markets, in good cities, good locations that make sense. It's not there. Like you're now
bracket creep.
100%. You're now up to like typically 600, right? Like there's still some markets, like especially some of the VIC markets that are showing some better performance that might have a 5. But for the most part, like you're talking a 6, right? But people aren't adjusting their strategies, or they're going, oh, I read a book from 5 years ago, and it said that like I just need to save 50 grand or 40 grand and I'll be
We don't have your book on the shelf here.
I'll bring
mate.
it. You know what?
We need. There's everyone else there except for you.
You're
You're one of the original Military Guide to Property Investing.
I know, mate. You know what? I'll send one of my team down to Savo and drop the book off.
There you go. Fill it up. But
But you know what I mean? Like people aren't adjusting, and it's hard because if you're not in it, you're not going to know, right? But like when you're doing it day in, day out, like we pivot all the time. Like I had a conversation with my team yesterday about the areas that we're in, starting to maybe drop a few of them off, or it becomes not sort of more mass scale buying because the market is really performing well. It's got to be hyper specific to a specific like brief or deal kind of thing. So, like if you don't have the right strategy in the market that you're in, it's also not going to work. And speed is one of the biggest things, one of the biggest killers or the biggest gainers.
Yeah, speed kills deals. Speed of the market means if you're not moving quickly, you're getting left behind. Speed is key.
Yeah.
And you've got to be comfortable with it. And this is just the accelerated nature of how things happen now. It's not slow, cumbersome process anymore. Deals are done quickly. Deals are done electronically. Finance is done electronically. Contracts are signed electronically. You don't have to drop off a contract in a real estate office with a wet signature on it, right? Like this is it. And particularly when there's pressure. Yeah, there's positive pressure on deals for good stock. You got to move quickly. And I'm buying a place right now. I won't disclose what or with who, and I will do in time.
Oh, come on! No teaser.
It's not with you.
No teaser. I know it's not
with Lachlan.
I know,
not with Lachlan. But
I know who you use. You've got a good long relationship with the team.
I'm not going to disclose anything who it is. And I reckon I'm probably at the other end of a client now. I reckon I'm a bad client these days.
You know too much. That's probably.
I'm probably a bad client now because I look at someone and go, nah. They put deals in front of me and I just go, nah. And here's reasons why. And you can see him just go, oh, fucking this guy. Pardon the French.
Here's a bit of a side note of the conversation. How do you feel like as somebody who knows, you've now bought lots of deals, and I know you've also bought lots of deals with the organization that you use and all the rest, right? How do you feel when you have a deal put in front of you and you don't like it? Like, do you get shitty at them and go like, how could you put this in front?
No, I feel bad. I feel bad saying no.
Yeah. Is it more of a case of like, you can see why they're doing it and you can see why for a lot of people it would make sense, but just for you, you're like, for me, no. For me, no. Yeah. Interesting.
And this is the challenge, right? And I would imagine now is that I'd be a very difficult client to buy for because I just go, well, I don't like it for these reasons. Yeah. However, I'm happy for you to tell me otherwise. Yeah. Like I want to. Yeah. Like I'll interrogate a deal. Yeah. And this is when, you may have too much knowledge. Yeah. And that's the opposite of speed. I could potentially slowing down deals.
Bit of Dunning-Kruger, maybe.
What's that?
Dunning-Kruger. You know what Dunning-Kruger is? The psychological where you think you know a lot, but you don't. But you reckon you're up there, and then you know.
Yeah. It's very specific, case study. This one. So but I actually, a lot of the deals that get put in front of me, I think are good deals, but they're not right for me right now.
Which is fair, and that's why I was curious, right?
Yeah, and I just go, no, that's way too much work. I don't want to deal with that. You know, like it's a very specific case study, and I will share what it is in time. Yeah. But I actually feel bad about saying no to deals. Like I just go, no, it's just for this reason. I give justification to it. Yeah. So, but I would make a buyer's agent work pretty hard for it now. So I'm probably on the bad side of the clients you want to deal with now.
I think though, I don't think there's anything wrong with that, right? Like we have the same conversation with clients. Like we say, like just because you put a deal, you got to remember for most clients, and I know it's kind of the opposite of your story, but I think to an extent you almost get back to that point as well. We say to a lot of clients, like if there's a deal you don't like we're okay with that. We are going to ask you why, because we want to make sure, kind of like you said, that we are making sure you understand exactly why it's there. But if the reasoning's sound, I mean, at the end of the day, you got to say yes. It's not like we can force you to do it, but like as long as the reasoning's sound, we got no issue saying, yeah, all good. We understand what's going on. But for a lot of clients, we'll also say to them, you got to remember that we don't know each other that well. Like this is like the first stages of dating. Like, yeah, you signed on to work with us, but like maybe this is the first deal we've shown you. Like, don't forget, you don't need to get angry at us because we've shown you a deal and you think it's maybe not what you wanted. Remember that we're going to then take your feedback to now go and adjust that for the next deal we show you. And I would go on a limb to say, I reckon literally over 95% of clients that we show a deal to will say yes to the very first deal. Doesn't mean we're going to get it, but they'll say yes. But for the small proportion that say no for whatever reason, it's like, you just got to remember, we're learning about each other. You tell me you don't want that. I'll tell you if I think that that's reasonable, or if maybe that's like an emotional thing you're putting in and it's not really based in fact and numbers. But we'll work each other out, But
yeah, and that's part of the process, and that's okay. What I would say is that if you keep saying no to deals going, no, it needs to do this, you're going to narrow your scope so far that you'll end up doing nothing, and then you come back to speed. Mate, 6 months on, you've done nothing because it's not perfect. Like no deal is perfect. There's compromise all 100%. Over the place, right? And some of the stuff that I've looked at so far has had sort of upside potential, and I went, well, I'm probably not going to go down that pathway. Or I might not realize that myself or whatever. So, I'll get there in the end. But I
think it's a good, I think it's a good nod towards, I think what criteria you end up using.
All about the brief.
Exactly
all
right.
About the brief.
And most people don't know, and that's why for us, we'll often be telling clients like, this is what you need at this stage, and they'll hear our reasoning and they'll go, I agree with that. It's not that we're saying we're a dictator. It's this is where you're at. This is why it should be that, and we'll do that. And they go, yep, fair enough. But using outdated criteria, I think, is the fastest way for people to be using the wrong strategy in where we are today.
That's the key point, right? And that's the third point of why early stage investors get stuck. We'll get into it. We'll just go to another break. Stay with us. Back in a moment. Welcome back. Phil Tarrant with Lachlan Vidler at Atlas Now. We spoke about it very quickly before the break. They use the wrong strategy for the current market, and that's what stops them in their tracks. And this is why early stage investors get stuck. If you're buying in 22 or 23, those strategies probably don't fit in 2025. Back in 22, 23, coming out of COVID, there was one clear market where most people were buying in. That was Perth. That was unique at that point in time. And what worked in that Perth market probably won't be working in other markets today. And the price points are considerably different.
Yeah, for sure. I honestly think one of the biggest things is speed. I think a lot of people, and we talked a lot about it today, but I think a lot of people naturally, they don't want to feel like they're rushed. They don't want to feel like they're making a snap decision, all the rest. But I think also to something we were talking about earlier, we have to adapt, and I think things like using conditions in contracts, using other things, it might feel scary signing on the line to buy a property. But if you've set the deal up in a certain way, you could sign off on an hour. You could find out about a deal. You could approve it. You could get the contract to you. You could have that all done, I think, realistically in 3 hours.
Yeah.
But if you got it everything set up, and that's obviously something we work really hard to explain to our clients, doesn't mean it always works. Naturally you get nervousness and all the rest. But now you control the deal. And now you're in a position that, you might not have had to be in a little while ago, but you've got to be in it now because of how markets are performing. You've got to be in it. You've got to control it. Terminate it if it doesn't work out, if you've got the thing set up correctly, but you've got to control it.
Yeah. Controlling the deal is absolutely critical. And if you're controlling the deal, it's forgiving because you've got a bit of time, right? And you can maneuver through really understanding, the asset you're buying with all those contingencies we've spoken about. So why has it changed so much, do you think, this idea of the wrong strategy in the current market? Why is 25 so different than a couple of years ago?
I think it's not even necessarily that like the world we live in is so different. I mean, there's obviously been lots of changes, but I just think it's as the market cycle, like there's been phenomenal performance over that whole time period, right? But sentiment has definitely, ebbed and flowed, and there's been other things economically that's gone on. So, I think there's been points in time where only the truest believers in property were buying, and for them, they were rewarded, and they made a lot of money over the last 2 years, right? But now I think we're getting back to a point where some of the more speculative people are now, and the more inexperienced, are happy to be getting in because they feel like the tide has changed and sentiment is there, right? So, like, that's already the wrong way to think about it. You know, you should be getting in as soon as you can. And for those people that didn't do it 2 years ago when they could have, well, congrats. You've now lost $150,000, $200,000 of net wealth for yourself, right? But
It's crazy.
you know, that's true, right?
So were the opportunities around in 22, 23, even a little bit early, say Perth, do they exist in today's market? I guess, is Melbourne the analog now?
I think that they certainly do exist, but I think we're also in starting to be quite a unique environment, which is that the issue of supply and demand continues to get so bad that, like, you wouldn't expect some of the property performance that's happened to have continued to happen, but it's happening because, like, the way that we have managed it at a policy level for the housing, especially the supply side, nationally in big population centres, has been so poor that that's the reason why some markets that, truthfully, they probably should have capped $100,000 to $150,000 earlier than what they are. They haven't capped, and they're still growing, and they will still continue to grow.
Yeah,
you know, like, we're going to be in a position, I reckon, in the not too distant future. Within 10 years, I would not be surprised, especially if these supply issues continue happening. Like the northern suburbs of Adelaide, where, like, we bought a property 3 years ago for like $280,000. I reckon in the next 10 years, if these supply things aren't fixed properly, and it's going to be pretty damn hard to do in this time period, I would not be surprised to see $1 million properties going in the northern precinct of Adelaide.
Yeah.
Because
so tripling in 10 years, right? That's out of control.
Yeah, but the thing is that there is not enough homes.
Yeah.
There is population that is absolutely going nuts in some respects. And we cannot build. Every home target gets dropped. Australia's productivity is, I think, the worst in the developed world.
Mate, I'm happy to talk about productivity. We've got a productivity commissioner now.
Yeah.
You know, and their job is to get big business and unions together to talk about productivity.
Yeah, well, let's make another $500,000 job.
Yeah,
you know, like, my God.
Let's put another committee together to come up with a paper around how to fix productivity.
It's ridiculous, isn't it? Like, honestly, like,
productivity is a big problem.
Yeah, I don't want to tangent from our conversation, but like, that is why I'm very happy to say I would not be surprised to see that, because should it be there? Absolutely not. But at the end of the day, it is no different to toilet paper and COVID, that when there is only so much of a supply of it, and that demand is getting bigger and bigger and bigger. Like,
housing productivity is where we're failing the most, right? You know, it's the people, terrible. It's the processes, it's the strategy, it's the direction of the government. You know, but let's just do you know what we need to do? Is bigger government. Let's get a bigger government to get more people to tell us what we need to do.
Yeah. Well, I've seen a lot. I haven't actually looked into the numbers.
Being cynical, by the way.
I haven't actually looked into the numbers, but I've seen a lot of people who I trust that have said it, like in the media. Like, I don't know them personally, but from everything I've seen, I trust their opinion. And there is a very, very strong consensus that if it wasn't for government spending, Australia is in a recession.
Yeah, absolutely.
Right? We are, and not just like a small recession, like we're in a large recession. Like, NDIS has been around for not that long, and yet it is now the biggest suck on government resources.
Yeah.
Right? Like, and we wonder where our productivity has gone. So we wonder why, like, they did something not that long ago. They looked at the cost of building a house. I think it was up to like almost 80% of, or maybe not that high, maybe 70% of the value of a house is now being spent on rules and regulation and the adherence to it.
Yeah, I think it's 40% is I think around the number.
Was it 40?
40. I think it's around 40 around.
You can see how annoyed I am. I'm wrapping it up to 70.
Yeah, 40% of the cost of a house or thereabouts is government red tape stuff.
Is that not insane that it's not the materials or the workers themselves?
It's probably podcast for another time.
Oh, I know.
Oh, mate, but it's yeah, but absolutely right. Like, I can't remember the numbers exactly, but you know, that the government, this pre the most recent federal election, saying, look at the economy, look at job growth, and it was like it's all in areas which are funded by the government.
Yeah,
government based. It's sort of government based, you know, initiatives and private initiatives. Private initiatives tiny.
Yeah.
So all the money is going into jobs created with the government spending stuff to do more stuff, right? Big government is a big problem. Australia doesn't need it. Anyway,
We digress from
We-
what's stopping early stage investors.
but particularly, well, but it's all connected, right?
Of
Because
course.
you know, and it's contingent to this last point around they wait for the reason why most investors get set. They wait for more certainty and miss the window.
Yeah.
Right? Everyone's sitting around waiting for our elected leaders and the bureaucratic engine that sits underneath them, the
Yep.
public service, whether it's at a state, federal, or local level, to get all these things right, to stimulate the market. And, you know, I'll invest when ... this happens. I'll invest when ... that happens. And a lot of people sit around waiting for perfect economic conditions or climate or for tells or for some sort of flashpoint or some sort of, you know, something to happen before, that's when I'll go in. And until that happens, they don't do it.
Yeah.
And if you want to sit around and wait for all the reasons why you shouldn't be investing, guess what? They're going to be in front of you every single day.
And that's the problem, isn't it, right? There is always a reason to not do something, whether it's investing or something else, right?
Yeah.
There's always a reason you can't go to the gym the next morning. You know, there's always a reason why you couldn't have chosen a different meal that might have been better for you. There's always a reason why you didn't go and, I don't know, look for a different job or study something. You know, there's always a reason why.
Yeah.
Or why not, but we always need to be focused on the reason why, you know? And for me, this is not just the why early stage investors struggle to scale. This is why this market is going to leave them behind, right? Like, let me share some data with you, some recent data. Nothing crazy.
You
right?
love data.
I do. I love data. It's why, you know what? That's why we get the results we get, because I love data.
Here we go.
It's true, but it's why we do it.
Well,
right?
I'm not here to endorse anyone. That's what you say. But I know your clients are pretty happy with you.
They're
So,
not.
there you go.
I don't think they're too disappointed.
Yeah,
but
they're not too disappointed.
that's what we do in Australia, right? It's tall poppy.
Yeah.
You know, are they happy? No, but they're not too disappointed. you know?
They're not unhappy enough for them to be unhappy with the continued users moving forward. It's the Aussie
Exactly
way.
right.
Yeah,
Exactly right.
My biggest issue, and it's to sort of digress again, and someone will go, "What's this?" I go, "Yeah, it's all right."
Yeah.
And like,
Not
for
bad.
Me, for me, all right is good.
Yeah.
Yeah,
Yeah.
like, yeah, all right is good.
Yeah.
People go, "Oh, it's just all right." I go, "Yeah, it's all right."
Yeah.
They go, "It's like, yeah, it's all right."
Yeah.
You know?
Oh, how you going?
Yeah.
Oh, not bad.
Yeah.
I said that today. I
Yeah,
said that today.
Not bad. Yeah, all right. Yeah. Okay, getting by.
Could be worse.
Yeah, could be. Yeah, it's a real Aussie thing. But anyway,
So some of the data, like I said, I'm not picking out anything crazy. You know, this is things that are very rare. Like, this isn't any of our super secret, private, expensive data. This is stuff that's readily available.
expensive data.
Yeah.
Okay.
It's 6 figures plus of data. You know, that's what it'll do.
Yeah.
And not low 6 figures either. But no,
Anyway.
some of this. Just to talk about like where we're at in some things and why, if you're not set up, and why, if you're constantly sitting there waiting for more certainty, you're going to miss and be left behind by this market, right? So some of the most recent CoreLogic data, right? Australian housing values up 0.6% in the month of June, right? Which is the 5th straight month of growth, right? 0.6% doesn't sound like a lot, but that's on a monthly basis, right?
Compounding.
And that's compounding, and that's also at a national scale, right? So if you think about that, I'm just trying to do some quick maths, right? If it was 0.5, we've got 12 months, that'd be up 6%. We're a bit above, plus it compounds. So you're probably talking 6.5 to 7% roughly, right?
Yeah.
Probably a little bit more, actually. Or no, it would be a little bit more. Maybe talking about 7.5%, right? 7.5%. Someone can fact check me on the maths. But my point is, that's national house prices, right? In the last couple of years, when rates have been moving, national house prices have stayed steady or they've dropped slightly, right? National house prices.
Yeah.
And yet over that time period, certain markets have moved up by 20, 30% annually plus, right? So if the national house price value is moving positively, and it's moving positively at not a small rate, and we're now in the 5th consecutive month, how do you think the certain investment grade markets are going to be moving, right? I'll leave that. That's just a question for
Is
me
that
to
a
sit
trick
on,
question?
right? So we got
Is that
that,
very
right?
Cryptic, yes.
Except for regional Tasmania, every capital city and rest of state region recorded a rise in values through the quarter we just finished, right? I'd say not bad, right?
Yeah.
Not bad. right?
Regional Australia, regional Tasmania, great place, by the way. It's not that big a market comparative to the rest of Australia. It's pretty small.
But if you think about that, every capital city and every other rest of state, even rest of state WA, which I'll be honest, like we might have done some buying in Perth, but we didn't really get.
Well, you're not up in Port Hedland.
We did not get some of that big mining type stuff, right?
Who's buying in mining towns these days?
No, I'm not making any comments about that. I know certain
Really?
people and certain agencies that do.
I haven't done this for 10 years. Like,
Yeah.
yeah. And it's funny. I was chatting to the guys over at Empower the other day, and we had this. I like your view on this because it's connected with it.
Yeah.
And the conclusion was the democratization of information for property investors is expansive compared to what it was a decade ago. And this lends itself to the issue of they wait for more certainty and miss the window because there's so much info out there. But what's happened is that people are better educated and therefore maybe not doing the stuff that they used to do, which was inhibitive previously for property investors, maybe buying off the plan stuff and all that.
Yeah.
I think most people are now going, maybe that's not right.
Yeah.
But they're doing all this other stuff now.
Yeah.
Which is like, maybe investing their first properties in trusts and doing all this complicated stuff like that. Like there's this sort of shifting cycles of what's going on. I think most people now know if you're a property investor, you don't invest in single economic towns. Yeah. Mining towns, for example. Yeah. But people still do it.
I can tell you my answer.
Yeah.
Easy answer to this, right? Yeah. For people who are getting help from professionals, right? Buying a trust for your first deal, whatever it is, I will trust that there is a good reason why that's happening, right? So my comment isn't going to be about those people, right? My comment is about people who are doing it themselves with no advice, right? Dunning-Kruger, right? That's where it comes from.
Okay.
Right? For people who aren't aware, I'd love to talk about,
Since you being an academic, is it?
Yeah, it probably is, yeah. The Dunning-Kruger effect is basically, go have Google. It's a very easy thing to understand. You're not going to go to the Wikipedia page, right? Basically what it says is, as you start to learn a skill or a piece of knowledge about something or whatever it is, your confidence level will go up rapidly, but your depth of knowledge is still very poor, right? So it's the classic old, when someone just gets a bit too big for their boots, and then they have a fall, and then they realize, oh wow, I'm nowhere near where I think I am, and then you get a normal, typical rise up. Then when your confidence starts to move a bit more in a correlation with what your actual skill is, right? That is what's happening here.
So keeping your ambitions in check, or
exactly right.
Yeah.
So people have got better access to information than ever before. So now they think that they know more than what they do, and then they get themselves stuck. And it's only after they make their fall, which is going to be a bad property deal, that they're going to go, oh, wow, I really butchered that one.
And these are the people who get stuck.
And these are people who get stuck, right? Yeah. Or some of the people get stuck, right?
Yeah.
But anyway, as we always digress.
So interest rates are on the way down.
Interest rates are going down, which, that's just going to inflame the situation further. We've still got vacancy rates in a lot of parts of Australia. We got sub 1%, right? Definitely sub 2%, but some of it is still even sub 1%, which is almost going to be just a rounding error in terms of when an agent might mark a deal as actually, rented or something, right? Then we've got immigration. So I was actually surprised by this, right? How's this? Net permanent and long-term arrivals in the 12 months to April 2025 were the second highest on record after the year to April 2024. How is that?
Weren't we told that immigration was going to be decreasing? I thought that. Didn't I hear something about that as maybe an election promise?
Yeah. How's that though?
I don't know.
Second highest on record. Not even like in the last 12 months. Second highest on record.
Skilled migration, students. It's a lot of students, but which is cool.
But that's still a need for housing.
Yeah.
Right, and that still compounds the problem.
Right?
Yeah, but it still inflames the market, right? So, and then we get into the age-old construction that just is nowhere near where it needs to be. And obviously, I know you and I aren't big. I know you and I aren't big advocates of buying, a house and land package or anything. But the lack of supply of that hurts the everyday consumer, and that's what sends prices in established markets and all markets skyrocketing.
So, what's all this mean?
So what all this means is, if you're somebody, and this is most prevalent in the early stage investors, right? Especially the people who have got, no to 1 to 2 properties. If you continue to sit back to wait for what feels like the certainty, and I'd say of all the people, it's the people who haven't done a single deal yet.
Yeah.
You are going to miss this window because, like, that's data I can produce in 5 minutes, right? Imagine the data that sits behind, like, for example, our team or other people who work in this industry that are also pretty smart people. I'm not the only smart one in the industry, right?
Oh, you're smart, are you?
There you go. That's not the tall poppy. That's the confidence
Here
in
we
what we
go.
do, right?
That's his military training there.
Right? But think about the data that isn't readily available to people, but is to a certain group who can see it.
Yeah.
What is going on in that data that isn't the free data that is done at a more complex level, right? So that's my point out of that point. And it's the point out of all of it is this is why people are going to get left behind in this market, but especially those early stage investors.
Okay. So hopefully that resonates with people. The key thing for me is the first one's got to be the right one.
Yeah.
So simple. How do you be successful? How do you be a smart property investor? Get your first one right.
Get your first one right.
Our first property that we bought in the smart property investment portfolio was a great property.
Yeah.
We only just recently sold it.
Yeah.
Probably 12 years on or
Yeah.
whatever. We built a portfolio of like, this is on smartpropertyinvestment.com, the view of like 18 properties. Put 200 grand in originally and pulled that 200 grand out sort of about 3-4 years in.
Yeah.
So built a portfolio with no cash.
Which can be an issue,
Can be done.
It's
Can be done. Can you do that today? Maybe.
yeah. Well,
I'm sure you can.
this is where
you do
being
it
a
right.
smart investor with the right help, right?
Yeah, we had the right help
Yeah.
all the way.
Yeah, that's the
All the
thing.
way.
It's you didn't try and do it yourself.
Didn't try and do it ourselves.
Think about
I
that.
still don't really do it myself. I have bought properties without using buyer's agents. So I'm okay with that bit. But I'm still using brokers. I'm probably still called about 2 or 3 buyer's agents when I buy. They're getting sort of free advice. So that's my privilege. But still using brokers, still using everything. But it's important, right? You can't guess your way through to properties 2 or 3. It's a key thing, right? It's got to be structured.
I completely agree.
So would you rather someone come to you and said, I'm new, I'm starting off, this is what I want to achieve, I want to get sort of 3-4 properties, will that work? You'll go, yeah, that's reasonable. It's a reasonable expectation.
Yeah.
Let's build a plan to do it. That's how you would rather do it rather than someone going, I bought this property, I've had it for 10 years, hasn't gone up in value. What do I do? How do I fix it? Which also happens.
What would I rather? I mean, look, horses for courses, right?
Yeah.
If we get somebody at the start, we can set them up so there's no mistakes.
Yeah.
Right? If we get somebody...
Can you guarantee mistake free or less likely?
Never going to make a guarantee on anything, right? Because I don't know what you do in your personal time. I don't know what I don't know what you spend your money on. I don't know what other things you got going on.
Yeah.
But what I can say is on our side, we're going to give you all the facts that we know about and all the logic and reasoning behind why we think it's a good decision. And you'll have to make that leap. But you're at least going to have, I'm confident in saying, far more information than if you had done it yourself.
So you're much less likely to stuff it up.
Exactly right.
There you go.
But
Use a buyer's agent.
Yeah.
Less likely to stuff
Less
it
likely.
up.
But you know what? That 10-year person or the person that didn't get performance for 10 years, I'll tell you what, they could be a lot more motivated than that other person because they know the cost of making the mistake.
Are you getting a lot of people now, you get in every market, like, fear of missing out. I've got to get in. Things are moving too fast. You're sort of finding that at the moment? Is that like a reactive response? And we're we're in a downwards rate cycle.
Yeah. Well,
people are now going, oh, it's time now. It's time. I've been waiting for this moment.
Yeah. Well, you know what? I don't like it when people sort of try and act or do things out of a fear of missing out. But I'll tell you what, right now, genuinely, you should have a fear of missing out because we're at the start of what is going to be moving, right? We're even just a touch after the start. But the truth of it is, the thing that hurts me the most is when I see good people who are set up not make decisions and do nothing. I don't even care if they go to somebody else. It's when I find out from them when they come back 12 months, 24 months later, and they go, you know what, we didn't do anything. Yeah. And I'm like, okay. Well,
so your thesis then, we're going to be moving into a bull market.
Yeah.
Are we at the beginning of the beginning, or are we at the beginning of the end of the beginning?
Oh,
is it the end of the beginning, or is it still the beginning of the beginning?
You know what?
Channeling
every market's different, right? Yeah. Some markets are starting to taper off. Some markets are starting to begin, and some markets are smack bang in the middle. So to me, the point is that if you're ready to invest today, there's a good market.
All right, let's quickly go through it.
Yeah.
Brisbane market.
I think there's some solid performance to be had in Brisbane. Yeah.
Perth.
I think in the right areas, there is still some solid performance in Perth.
So the end of the beginning, or it's the middle?
I think it's the middle and deal specific.
Okay. Darwin.
I cannot in good conscience go to Darwin.
Yeah.
I cannot in good conscience.
Because I'm hearing like a lot of people saying Darwin is going to fire this year, but
You know why? I'll call it out because there are poor operators who see price point and see clients who can only afford that. And I'm not saying that Darwin isn't going to go up, but what I'm saying is that the risk, to me, there is no warranting going there, especially to look back in 5 years. Because if you're buying a property for less than 10 years, why are you buying it?
Yeah. So you might get in okay, but getting out's a problem. Yeah.
Like, it's just like there is probably no more cyclic market in Australia than Darwin, right? And cyclic in the sense of boom and bust.
Yeah.
You know?
Always is.
Right.
Radelaide.
I like Adelaide. You know what? I actually don't love Adelaide as a city. Whenever I go there, my staff are like, they know how much I don't enjoy going to Adelaide. But
So steady. It's not the beginning, certainly,
No,
that market.
but I think
it's not the end.
Adelaide just keeps getting a fresh wind. And you know why? It's because it's actually I think it's a relatively well-designed city. The northern precinct especially is well connected to the centre because of the motorway. And because there's like some big industrial parks up there, they needed to have connected compared to the southern part going up. And it's not it's not a bad city. Like sometimes people are a bit boring from Adelaide, but like
I kind of like Adelaide.
and they got the Barossa. I mean, who doesn't?
It's close.
You know,
It's
so
close. But you see, young people aren't drinking wine anymore. They say it's a crisis.
okay.
In viticulture industries, it's in Australia specifically. It's going to be a crisis. Young people don't drink wine.
You know what? If
They drink seltzers and craft beer.
if that's the case, that should drive the price down for the rest
Red
of
wine
us.
in particular.
Yeah,
You'd hope so.
we should get a good
Should be
price on a bit of Grange.
Glutton wine. Sydney.
I think that there is some to come for Sydney, but the biggest problem is the price.
Yeah.
The biggest problem is the accessibility of it, and and for most people, it will not make sense to buy here, even if you could, because you could buy more assets to be in different markets for the diversification benefits than one property in Sydney.
Yeah.
You know?
Yeah. Sydney, I imagine, would be a long-term hold type play if you're going to get in there.
Yeah.
You're not going to be trading up in capital values, right? Getting in and out gets a lot more expensive
Absolutely.
as well.
And to me, I guess what I meant was it's also the opportunity cost. Like if you're going to go drop $2 million on something, you know, like your opportunity cost could be 3 properties elsewhere. Because at the end of the day, you have to translate it back to percentages. Like your property might go up by 300,000 in Sydney, but like that's, you know, like that percentage-wise might not be the same as another market where it only goes up by whatever dollar amount, but it's actually gone up 45%, you know. Or,
But if you've got a few of them in there, you're getting upside of that, right? Or elsewhere.
that's what I'm
good.
saying, that diversification side, you know, it's the opportunity cost.
And then Melbourne, beginning.
Yeah, they're definitely at the beginning. You know, I think that certain markets are going to be more likely to perform than others, and I think that at the end of the day, the affordable markets, because of
Same thing.
like it's accessibility. You know, they're probably more primed. But I mean, you can buy some houses close to the CBD in Melbourne for not that expensive relative to Sydney prices, given Melbourne is a pretty damn big city with a pretty big economy, even if the government's doing everything they can to try and tank it.
So you can get sort of close to the city in Melbourne for what, 600, 650,
Oh,
700?
you're still going, like, it depends your definition of close to the city, but like there are some properties, like I've seen some properties traded quite close to the city for sub $1 million,
Yeah.
right? Like I think in Sydney, like to get a house sub $1 million in Sydney, you're probably like out in the heart of the West.
Yeah.
You're in the heart of the West.
Yeah.
You know?
That's the heart and soul of Sydney, the heart of the West.
That's where the workers are, you know, and they do a great job out there. They do a great job.
It is sort of like, what's a medium for Sydney now? It's like ridiculous.
Oh, it's insane.
1.6, is it?
It's obviously it depends on the provider, but it's I think most I'd say are confidently above 1.5, definitely 1.4.
Yeah.
How's that?
Good.
You know?
Crazy. Well, thanks for coming in, Lachlan. 4 reasons early stage investors get stuck. I think we did pretty good. If people want to chat to you about it, they can just track you guys down.
Hey, come to our website, atlaspropertygroup.com.au, and fill in your details, book in a call with us. We'll get in touch with you, and make sure, as we get towards the end of the year, I know I'll be in for a few more episodes, but make sure you're looking out. Tune in to see me on Primetime Channel
I'm
9.
I'm going to sit down and watch it and giggle.
Mate, you'll
Go, look at that
heckle me.
guy.
You'll heckle me and
Look
I
at
won't
that
even be in
guy.
the room.
I know.